Happy Friday and welcome to the National Real Estate Cafe with Don Gino and Gino Franti, where you get your daily dose of real estate market updates.
If you like your caffeine as much as I do, you have lots of doses during the day. And today's actually a pretty cool day. We have some big news coming a little later. Once we get all the crust out of our eyes, it gets a little later in the day. Don and I usually like to get up, 4:30 and make sure to get our day started pretty early. So a little later today, we find out about GDP, some really important numbers to see where we're at.
I was up early today, hit the gym again.
Yeah.
That's right. So, happy Good Friday to you, and have a great weekend, right? There's a good special weekend this weekend.
So for those of you that are celebrating, we want you to definitely enjoy time with your family, celebrate Easter, and go back to eating beef. I don't know about you, but I'm tired of eating fish.
All right, so to close out the week, let's let you know what's happening with the interest rate market and the stock market. We were pretty... we were on the ball as usual.
Yeah, the stock market, everybody had a panic. Everybody was concerned about the decline in the stock market and were very, very worried that it wasn't going to come back, or that the bubble was bursting, I guess you could say, for the stock market. But we said, don't worry. And our financial planner from the Don Gino Real Estate and Finance Show also said, don't worry.
That's
Everything's fine.
Yeah, we do. We have our weekly radio show that's been going on for 5 years. You can check it out at donandgino.com. And we had our financial planner on talking about the crash, and he said, don't panic, because he handles a lot of our funds. And he said, I didn't make any calls. So let's check out this chart and see why he said not to panic.
Yep. Oh, man. I could see where people would panic those days where things were crashing. Look at all those red candles. Yeesh.
So the red is obviously bad. That was the sell-off in the stock market. And you can see it has slowly come back. So we actually almost got all the way up back to where we were, and we've now hit that as a resistance level, and it's retreated a little bit.
Yeah, and it's probably going to come down a little bit further. You'll see some support lines there a little bit lower. But at the end of the day, one of the things that's going to happen, and we talked about it this morning with Chris at the gym, is that don't forget, May is coming. So we will have another little bit of a dip that's a seasonal dip in the stock market coming in May. So keep an eye out for that.
All right, so this next chart, let's see how it's affected the interest rates. So we had a nice little run-up, meaning the interest rates are inverse. So when they're buying bonds or buying mortgage-backed securities, basically, the green lines mean they're purchasing, red means selling. So we had a nice run-up for a while there, you saw, and then we had a little retreat back down a little bit, which meant rates went up a little bit. But now we're sitting pretty good.
Yeah, and you could see that we're not right where the peak was. In those days that you see the peak where rates were in the high threes, maybe starting to creep towards the low threes. Now you're in the high threes, low fours, depending on your scenario.
So bottom line is, the market is great. This is the time to take advantage of interest rates. They're not going to stay low forever.
No, and one of the things we're looking at the most right now is debt consolidation. If you have anywhere over $20,000, $30,000, $40,000 worth of debt and you have equity in your house, it's a really good idea to take a look at.
All right, you heard it right here in the National Real Estate Cafe. You can get these videos sent directly to your phone by texting NREC to the number 58885. That's NREC to the number 58885. Have a wonderful Good Friday and have a happy, blessed Easter.